So, what we are looking at in front of us is the fact that there's a lot happening in the market. When you do look at what's happening with its SEC, consensus, Ether, all of that story, it's one side where SEC is now backtracking on what they have said before. But at the same time, we are watching this too happening in front of us. Banking crisis is still active, still alive. If you remember the story, First Republic had trouble, it was sold, kind of taken over by JP Morgan, and right now that's again going down. At the same time, if you look at JP Morgan, they are also having trouble. Asset managers, which is like, nearly 15 billion, they were handling that amount. Now, all of them are jumping out. So, what really is happening in the market? It is true that there is a lot happening because if you don't focus enough, you are missing a lot. On one side, you're watching a currency from one of the biggest nations in terms of GDP is now slowing down. So, on the currency side, it's getting devalued. On the other side, you're watching investors in that country who use that currency is slowly going on to crypto, especially Bitcoin in this one. So when you do take a look at this, it's literally going all the way back to 1990s. Even with 1% move, the currency is going all the way in the 70s. Think about what's going to happen in that economy. And this is all happening while the dollar is strengthening. We had this thought process shared in the SI family where we follow up everything, including the macro market. Right now, you're watching the price action did go back up. So when I posted this, it was here. And right now, if you go look at the market for dollar, when it closed, it's at 106. If you do look at what we are discussing about, you can actually see that the price action is coming back up. That dollar strength is what weakened the yen. Now, what about the crypto market? What are we really watching here in the Bitcoin side of things? Because we've been consistently putting in lower highs and barely a lower low. So that kind of creates a question of, are we changing the trend? What the hell are we going to really see in the short-term movement? Because Bitcoin right now is 62,850, and that kind of creates a lot of questions. People won't actually understand, this is just a bear movement in the market because they are not looking at the entire picture. Because remember, we had this thought process shared clearly saying, okay, this is what I'm expecting. Yes, it is true that we did that move up to test the moving average before we dropped. See, there's a 4-hour chart, and if you do look at the 4-hour price fluctuation, you can actually see that. After that, you went back up, tested the moving average, got rejected, and you are coming back down. Now, keeping the supports active is going to be the very, very, very positive thing which we would like to see in the market. But what would the story be on a daily chart? What would the story be on a 3-day chart and a weekly chart? All of this actually matters a lot because we are here. Now let's discuss in detail. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10 person of this world. Right now, yes, this is slowly playing out. You actually broke this range. You're trying to push lower. Great. So the moment you actually go on to a daily chart and you look at the volume, you're like, okay, last day we had a little bit of selling volume. Fine, but the price action showed you that sellers are strong or buyers are at least weak. Because with even higher buying power, it didn't actually push all the way back up. So you're still here. Now, with similar amount of selling power just right now, you're watching sellers are dominating or buyers are slowing down. Fine. So when you enter into a 4-hour chart, a 12-hour chart to break that down, you're now watching like, okay, this is a critical range on the micro chart, 62,750. If you do break that, now you're talking about another low here, which would be somewhere close to 61,700. Another $1,000 drop in Bitcoin, right? So you take your movement and back to the 3-day chart. We had a micro range. We broke that to the downside when now we are retesting and getting rejected. What do that mean? That's a 3-day chart. So yeah, we'll have to again zoom out, look at the weekly, and the weekly shows you we're still in that kind of a range bound movement here, which is a wild range actually. And we've seen all these wild movements before with a long wick to the upside, with a long wick to the downside, a huge range. But now, one of the key aspects which we have to keep in mind is if we break this range, which is like the 60 to 59 to 58, there's a lot of concern inside this. At that point, remember, we've been talking about this as a possibility, comparing the price structure. We've been talking about this range as a possibility for some time. Now, yeah, majority won't agree until that plays out. But at the same time, we do understand the fact that when you compare the market cycle, it shows you that we have not yet missed one leg to the upside till this point. So why would we miss it this time? Maybe that's a trap. Agreed. But the odds based on a macro chart still suggest to you the fact that we may have one more leg before we actually go down. But meeting the supports of 58 to 60,000 actually serves a lot of value. Now remember, we only have very few days for this monthly candle to close. Can this be an inside candle? Will it actually break the downside of 61,200 and close there? We'll have to see how that goes in just few days from here for sure. But the moment you actually go into the breakdown of these price action, at least on the weekly towards 3-day and daily, you get to see like it's cooling down for sure. Now the long wick which we had in the doji here, a hammer, usually suggests bullish movement in the market, gives us some idea to say, okay, if we don't close the candle here coming down, it's okay. If you do close it here, it's still fine. But if you go down to 60 and then come back up and close here, that's a long wick to the upside and to the downside, which shows indecision. Just like this, you had a candle to the upside, you had a candle to the downside, you're still in that range. Hell lot more of volatility in the market. That creates a lot of confusion among the market participants for sure. So here we are looking at XRP. Literally, we got rejected at this point. We are slowly coming back down. We would like to see this support being met. What's that? 0.48, just below that, 0.4742. That's the key range of support in XRP. At the same time, if you do look at Ether, it's still in the same way. You had a range which was a micro support, which then turned into a micro resistance. And right now you're watching another level turning in as a micro resistance, which means now you're looking for the supports. This is first level of support which you would be eyeing, which is like 2,863 or 2,800. That range is really close to that support. Now, for sure, it follows Bitcoin a lot, thus slowly moving back down and looking at how much we have already dropped and how much room we have to the downside is important. It's necessary. So the moment you actually take the charts into this level, break it down to the trend, you're like, okay, we should come back down to the moving average, which is like 2870, which is actually close to that range which we just discussed. And that makes a lot more sense too. But the moment you actually look at the weekly chart and say, last time we had such a move to the downside with the MACD and this, where the hell was the price action? I mean, for me, I would argue that this is really, really, really important one. Why? See, let's actually take the MACD a little bit bigger and zoom in a little bit more so that we understand what we are really breaking down into. So this is that range which you're talking about. The MACD showed I'm crossing to the downside. The MACD is showing I'm crossing to the downside. By the time the MACD crossed to the downside, if you put in a vertical line with this and match it with what the price action was doing, do you notice something there? That was the exact candle which formed the bottom. Yes, it's a weekly. You need a little bit patience for sure. You remove this and you see that long wick. That was the bottom. So right now, if we repeat that history, we just crossed the MACD to the downside. Are we near a local bottom? Because that's exactly what we did last time. Fine. That bounce failed here and it went back down. Now, yes, that bounce didn't actually make a higher high. It was just a lower high, which led to another lower low. So the price was still trending to the downside and the pattern looked something like this. Fine, that's okay, that's good. Because when you actually zoom in to see what we are doing right now, it kind of resonates a lot with what we have seen in the past. Yes, it's not as long as of now compared to the last one, but we kind of get the taste of there is a possibility that we may do that. Now, why is that? Because the moment you actually come on to a macro, you're looking at this chart. You're looking at the MACD moving to the upside with a lot of volume. The RSI showing you still have a lot of room to the upside, and it can be just the retest of this zone. If you have actually noticed about the difference of what the price action is doing, especially with the range of movement here, say for example, that's like what, 60% move from that local high. This is what, 70% move from that local high. So it kind of shows you, yeah, that's actually a good range to be in. And then you look at the total movement to the downside. That was like a 39-40% to the downside. Oh, I got it wrong. That was close to 36% to the downside. And here we are in this short-term drop. I think we made, 30%. So we are almost close to that. So can we actually drop 36%? That's a question. And if we do, that's 2,640. 2,641 to be precise. Now put that number into the current equation and see, are we dropping below the moving average? No. Is the moving average still trending to the upside? I mean, if it's me looking at the chart, I would actually look at which direction the moving average is looking at. That's important for me. And is the moving average getting saturated after running up, or is the moving average getting saturated after the correction? That kind of gives you an idea that, yeah, there's a lot of possibility that you are in this zone, which kind of actually shows you, yeah, that kind of, gives more room to the upside. And one of the reasons for that is this consolidation in Bitcoin. One of the reasons for that is the entire legs of consolidation, because if you do look at what we have seen historically, one by one, you kind of get to see there's a lot of similarity here. You had this pattern playing out, you had this structure playing out, and an accumulation, reaccumulation, I should say. So this was that pattern, this is your reaccumulation. So you look at the number of days taken here. It was way longer this time around. You look at the next one here. It was a bit more here. You look at the next one here. It was, or it is, a bit longer in this time too. So we are watching that something is playing out which is similar. The structure, but the time taken for that to evolve is more. Yeah, for sure. And there was also another leg up where you got the negative divergence confirmed. As of now, we don't have the negative divergence. As of now, we are looking almost similar to the price structure. All that being said, I really don't want to see the price action breaking this range of consolidative phase. What do I mean? I mean actually taking the entire zone here, which is the daily chart, so that we understand what we are talking about clearly. When we actually draw our trend line, a trend, what do we notice? We focus on the higher highs, higher lows for sure. That means this entire range, which we saw here, is that trend to the upside, right? The 1, the 2, the 3, you're consolidating there. We may come back down to this 52. You're still trending higher. You still have a higher high. You still have a higher low. Technically, that's still possible. But the problem is the liquidations at that time is going to actually drop the price like nuts. 1. 2. Such a drop all the way from 74 dropping towards 52 is going to be a 30% drop. And now, being, realistic, we should be looking at history and we would look at that and say like, okay, we've seen these moves before. That was what? 32% drop. So the market has actually shown us multiple times that you can possibly see 35% drop in the market for sure. But now you look at the trend realistically. You're looking at what we have seen in the recent past and you plot all of that. And it shows, okay, yeah, if we do break the current range, it makes a lot of sense. And that's one of the reasons why I was arguing that this range of support is very, very important. Because that not only serves as a horizontal support, but also a trend line, which, the price actually respected that trend line for a long period of time. Once it was support, then it turned into a resistance. Now it's not being perfectly represented here. But if you do note that, you'll actually see the clear view here. It's somewhat like this. Fine. So it was a support before, then it turned into a resistance for a long period of time. Now we broke back above. Can we make that as a support and then bounce off? That's what we are looking at. Now, in order to do that, the price action should come back down a bit more to 62,182. Fine. Even a wick to the downside to 60, 59. That's actually okay. Just you got to go back up and close there on at least a 3-day chart, at least a weekly chart. That's completely fine. But if you don't, and you break this to the downside, the 60,000, and close the candle to the downside, it's going to be really, really choppy. Now, what are the odds for that? Right? That's something we should be asking to yourselves. When you usually see such a trend to the upside, we look at the trend formation in the MACD, we look at the trend formation in the RSI. They kind of give us a idea that, yeah, we are reaching the bottom. We are there, right? We are almost there. Now we take the RSI and you're looking at the RSI and saying, like, no, I broke to the downside, I retested, I'm getting rejected. So the RSI is showing you a different story than MACD. And the price action is showing you a different story, which is similar to MACD. Now, usually, unless all the three agrees, you should be cautious. 1, the price is below the moving average on a 3-day chart, not a 4-hour, not a daily, a 3-day chart. Then, what usually end up happening is the price meets the weekly moving average at some point. Now, price is at 62, moving average is at 54. For them to meet, it would be somewhere around 57, 58. I would still be happy to see that range being met. Why? The moment you actually get to see this range being fulfilled, that's like the all-time high still. There's a weekly chart, and as you can see, the argument makes a lot of sense, because if you do zoom a little bit out looking at all this, you can argue, yeah, that's a breakout, that's a retest. But can that be a fake out? That's the biggest question. Because if you do break that to the downside, then that becomes a fake out, and that's really, really bad. It's going to be a long way from here. Not in terms of time, in terms of volatility. Because that's what keeps our emotions in a turbulent position. Because you don't take the right decisions when your emotions are highly, highly, highly turbulent. You shouldn't be like a tornado while you're taking decisions, because that's only going to erode the quality of that. And here in the market, especially in the crypto, that's what you're really looking at. And if you are thinking like, okay, there's a lot happening in a lot of different aspects in this market, you're looking for a lot of different indicators. You're looking for a lot of different historical movements in the market. If all of them agree on one thing, then it's actually okay. Or at least the majority agrees on one thing, okay, you have some knowledge about the market to make the right decision. So that's one of the reasons why we look through a lot of these. Remember, we talked about this trend line formation in the Bitcoin dominance. If we do break that to the downside, it's cool. But as of now, we're not doing that. And the way the Bitcoin dominance is showing you this, I'm afraid to say maybe we're going to come back up. Maybe we're going to retest this range. Maybe we're going to hit 58 before we go back down. I'm not sure. But as of now, the price does show you a falling wedge, which usually breaks to the upside. So be educated, well educated about the market, especially about the altcoins, because if the Bitcoin dominance is about to go up like this, you will see more altcoins dropping back to the recent lows, the recent drop, the supports. A lot of them were really, really choppy. Say this is XLM. The bottom was 0.088, close to that range. So we may still go back down to revisit those levels. If you had margins added, that's one of the reasons why I told you at this point early this month, don't remove them. Keep it there. If it's me, I would do that. Because if the market is making a double bottom and bouncing back up, I don't want to be kicked out of my trade. I want to remain in the trade and take benefit of the upside as it comes. But while the market remains choppy, any emotional decisions or any new trade here may not make the right sense unless you get to see a big reversal signal on a 12-hour chart, on a 4-hour chart, or at least the structure matches up. You get to see the 1, 2, 3, 4, 5 structure. We have seen that, the 1, 2, the 3. So that's the 1, 2, 3, 4, 5. So I'm looking at the impulse to the downside, 3 impulse to the downside. So once the price does all these things, then you have higher odds. But right now, what do you see here? You have a double top structure, which then started to the downside. You have a double top structure, which is starting to the downside. Then you have the 1, the 2, the 3 is going down. So at some point, you'll start consolidating, going back up, and then boom. So this is the third leg I'm looking at. Now, if this leg end up here at 60 or 59, the bounce can be 62, the drop can be 58. That would be a new low for this leg of corrective movement in the market, and that's going to shake people out. But if that market move closes the weekly day, that wouldn't look really good. We don't want to see the weekly close day. We don't want to see the monthly close day. Because remember, all of this goes back to the macro chart. And the macro is still, this is one of the reasons why I told you guys, this range being tested is okay. 58 is okay for me. Because that's the monthly. If you can bounce back from there, that's huge. That's perfect. Remember, this low which we formed, it was at the all-time highs. That was cool. Yes, the price did drop. It was panic in the market, but that didn't kick a lot of people out. Those who were strong, those who knew what they held, they did get the benefit of the market moving back up. So this is going to be most likely such a scenario if we hold this here for the monthly, and that's just 4 days for us to see whether that's going to be a relevant topic to discuss after 4 days. And if it does, don't miss out. That's why the SI family stays well educated about all these scenarios, including the crypto market, including the macro, everything else. So if you want to join that, use this link in the description below to reach me in the SI family. If you haven't hit that like button yet and you think you received value in this video, you learned something new, then smash that like button for me. I'll meet you guys on the next video. Bye for now.